You thought your hefty 100-ounce silver bars were your ticket to wealth, but the 2026 price surge revealed a devastating flaw. When you finally tried to cash in at $120 an ounce, you discovered that no dealer wanted your oversized assets, leaving you trapped with illiquid silver. Your 100-ounce silver bars became a trap. This is the silver bar liquidity crisis that nobody warned you about. Silver prices hit $120 per ounce in 2026, but owners of 100-ounce silver bars couldn't sell them. The 100-ounce silver bar trap destroyed investors who thought bigger bars meant better value. But before I reveal which silver bars are actually liquid and exactly what you should own instead of 100-ounce silver bars, let me show you the 3 hidden traps in large silver bars that could cost you thousands when silver prices spike. Welcome to Financial History Decoded. I am going to show you why 100-ounce silver bars are one of the worst precious metals investments you can own. And I'll prove it with real data from the 2026 silver price surge that left 100-ounce bar owners unable to sell. Here's what happened. Silver prices exploded from $28 per ounce in January to $120 by March 2026. A 400% gain in 90 days. If you owned 100 ounces, your investment went from $2,800 to $12,000 on paper. But when 100-ounce bar owners tried to sell, local coin shops wouldn't buy them. Online dealers offered 70% of spot price. Private buyers disappeared. The 100-ounce silver bar became unsellable. This is the liquidity trap. Trap number 1. The verification problem. A 1-ounce silver coin like American Silver Eagles can be verified in seconds. Dealers test them in 2 minutes, but a 100-ounce bar requires XRF spectrometer testing that costs $15,000. Most local shops don't own this equipment. They can't verify your bar is real silver. Without verification, they won't buy at any price. You're stuck? Trap number 2. The counterfeit crisis. Chinese counterfeiters flood the market with fake 100-ounce bars. Tungsten cores with silver plating. Tungsten has identical density to silver, so weight testing doesn't work. X-ray testing only penetrates millimeters, so plated fakes pass. The only verification is drilling into the bar, which destroys its value. Dealers won't risk buying $12,000 fakes. Your real bar becomes worthless because it looks like counterfeits. Trap number 3. Premium collapse. You buy 100-ounce bars at 3% over spot. Silver Eagles cost $4 over spot per ounce. Looks like better value. But when you sell, the premium reverses. In 2026, Silver Eagles sold at $130. 10 over East 100-ounce bars sold at $84.36 under spot. You paid 3% premium to buy. You ate 30% discount to sell, 33% loss before prices even moved. Real market data from March 2026. Silver at $120 spot. Dealers paid $115 to $125 for Silver Eagles, $110 to $115 for 1-ounce rounds, $100 to $110 for 10-ounce bars. $70 to $94 100-ounce bars. A $50 per ounce discount on 100-ounce bars means you lose $5,000 of $12,000 instantly. Why did this happen? Market microstructure. When silver spikes, who buys at $120? Retail investors with $2,000 to $5,000. They buy 15 to 40 Silver Eagles. They cannot buy a $12,000 bar. The buyer pool collapses. Institutions buy direct from mints. Wealthy collectors already own silver. Zero buyers at retail when you need to sell. Supply without demand equals price collapse. What should you own instead? Government minted 1-ounce coins. American Silver Eagles. Canadian Maple Leafs. Austrian. When silver hit 120, Eagles sold instantly at full spot or above for lower premiums while keeping liquidity. 10-ounce bars from Sunshine Mint, Geiger, Scottsdale. During 2026, 10-ounce bars sold 10 to 15% under spot, much better than 100-ounce at 30% under. The counterargument is 100-ounce bars work for long-term holds. This fails three ways. First, emergency liquidity, job loss, medical crisis. You need cash fast. Illiquid silver is worthless. Second, opportunity cost. Silver spiked to 120, then crashed to 45 in 6 months. You can't take profits with illiquid bars. Third, estate planning. Your heirs inherit illiquid bars. They get crushed selling them. What happened after 2026? Silver crashed from 120 to 45 by September. 63% decline. Investors who bought Eagles at 30 in 2024 and sold at 120 locked in 300% gains. Investors with 100-ounce bars held through the crash. Liquidity allowed profit-taking. Illiquidity forced holding. If you own 100-ounce bars, now, 3 options. 1. Hold as civilizational collapse reserves. 2. Sell now and swap to 1-ounce coins or 10-ounce bars. Pay the premium for liquidity. 3. Buy only from recognized mints with serialized bars and get third-party certification from PCGs or NGC. The math. Investor A buys 100 ounces as bar at $30. Costs $3,000 in 2026 at 120. Paper value $12,000. Sells at 85 due to an actual 8,500. Gain $5,500. Investor B buys 100 ounces as Eagles at 34 with premium. Costs $3,400. Sells at 125. Actual $12,500. Gain $9,100. Investor B paid $400 more but gained $3,600 more. Premium was worth it. Warning signs. You hold illiquid silver. You can't name 3 dealers who'd buy today. Your silver is large bars over 10 ounces. No original packaging or serial numbers. Never tested selling. Vague exit strategy. If these apply, you have liquidity risk. Bottom line, silver is only valuable if you can sell it. 100-ounce bars looked smart due to low premiums. The 2026 spike proved their liquidity traps. Bar owners couldn't sell at market prices. Eagle owners sold at premiums and locked gains. Liquidity beats low premiums. Don't get trapped. Subscribe for weekly precious metals analysis. Share with Silver. Comment what silver you own. And if you've tried selling, your exit strategy determines if silver is asset or liability. Stay liquid.